Over the last 2 years or so, we have seen the cryptocurrency market explode and literally take the business and financial world to the moon. And even if you're new to investing, it's pretty hard to ignore the story after story about Bitcoin rising in price and then immediately dropping the very next day. Like this past weekend, Bitcoin was up again around $52,000, but it immediately dropped only about 2 or 3 days later. And typically when Bitcoin crashes like that, it'll eventually take all the other cryptos with it. So in today's video, I wanted to go over the cryptocurrency market, where it's been, where it is now, and where it's going. Like I said, there has been a ton of news headlines lately involving crypto, and if you want to become a cryptocurrency investor, it is super important that you understand the cryptocurrency market and these headlines. So make sure you watch this video until the end to figure out what exactly is going on in the crypto market and what could be coming for Bitcoin, Ether, and Dogecoin in the future. But before we get into all that, I need you to do me a quick favor and smash that thumbs up button and ring that notification bell below. That way YouTube can show our videos to other prospective money minds, and we can make more videos just like this one. Thanks for doing that. Before we try to find out exactly where the crypto market could be going, it's important to look at its history and where it's been. Cryptocurrency as a form of payment has actually been around a lot longer than you think. Back in 1983, American cryptographer David Chaum created the world's first cryptocurrency called eCash. However, eCash worked a little bit differently than today's modern cryptocurrencies. The process essentially worked like this. Say you wanted to go buy some avocados. But instead of buying the avocados with your money, you'd use the eCash. After the transaction was complete, the eCash would essentially use encrypted software to withdraw the money from your account. And because it was encrypted software, the recipient had no idea where the money would come from. That meant in the early days of cryptocurrency, all transactions were completely anonymous. At first, it was heavily monitored by the NSA, or the National Security Agency of the US. And the idea really didn't take off the ground even in 1995 when David Chaum created his first company, DigiCash. Only one bank ended up hiring DigiCash as a company and using the eCash software, so up until 1995, cryptocurrency was considered a complete flop. And for around 15 years or so, not really much changed in the cryptocurrency game. That is, until 2009. That year, the world's first decentralized cryptocurrency was released, and it was called Bitcoin. It was created by a person named Satoshi Nakamoto, but this is considered to be a cover name for the person who actually created Bitcoin. Bitcoin completely changed the cryptocurrency space because this coin was decentralized and it worked on a technology called blockchain. Essentially, every single time a Bitcoin is mined, and we'll be talking about the mining process later on in this video, it is recorded on every single individual computer in the network. Since the blockchain is made up of thousands of different computers scattered all across the world, the currency is considered decentralized. This means that all the money and the transactions that come from those coins are not held in a central location like a bank or other financial institution. They're held completely online on the web. In the beginning, Bitcoin was not all that popular and was only valued at around 10 cents per coin for its first full year. In fact, the first transaction involving Bitcoin didn't even take place until 2010 when a programmer named Laszlo actually bought 2 Papa John's pizzas for over 10,000 Bitcoin. And in 2010, after nearly 500,000 Bitcoins had been mined, Nakamoto basically just disappeared from the face of the earth. This opened the door for thousands of new miners to actually start mining their own Bitcoins, and by 2011 and 2012, nearly 10 million Bitcoins were on the market. But this was also the darkest period for Bitcoin, as the Silk Road and other online black markets began using the cryptocurrency pretty much exclusively for transactions. It did, however, grow the value of Bitcoin from around 30 cents in 2009 to well over $13 in 2012. And in 2013, the price of one Bitcoin went from around $13.30 to well over $700 by 2014. And the rest is history, with now major brokerages forming to allow people to buy, hold, and sell major cryptocurrencies like Bitcoin and Ether. We now have major government agencies around the world actually watching and authorizing the use of Bitcoin, Ether, and other cryptocurrencies. And this year alone, we saw the price of Bitcoin hit a record high of around $65,000 for one coin. To put that in perspective, 1 ounce of gold is currently worth around $1,800 US. If Bitcoin and Ether are so valuable, then why is the cryptocurrency market constantly rising and crashing just about every other day? That brings us to the present. It's important that you understand that all markets across the world run in cycles. Like, take the stock market for example. New York Stock Exchange on Wall Street is either in a bull market or a bear market. A bull market is simple. When investors have confidence that the economy and the market will continue to grow, they continue to put their own money in. This sends the value of a stock or the stock market much higher. But a bull market won't last forever, as economic changes and policies could happen on a dime and consumer interest could change. This could lead to a crash in the market or just an overall drop. And when the stock market is crashing or dropping, which means you have more investors selling their stocks than buying them, you enter what's called a bear market. Bear market simply just means that investors aren't buying stocks, which means all of the prices on Wall Street and the prices for those stocks drop. The cryptocurrency market has bull markets and bear markets as well. The biggest difference between the stock market and the cryptocurrency market is nobody really knows where the cryptocurrency market is headed. When you buy a stock, you're basically buying a partial share of ownership in that company. This means if you buy shares in Amazon, McDonald's, Walmart, you can be pretty sure that those companies are going to be around for the foreseeable future. Overall, you have confidence in your investment. When you invest in a cryptocurrency, however, nobody really knows if the coin is going to even be around tomorrow. This is one of the reasons why the cryptocurrency market tends to be very volatile, meaning that it rises and falls at a very rapid pace. Cryptocurrency investors simply don't know what their investment will look like a week from now, let alone 5 years from now. The confidence is so low because the only thing that gives cryptocurrency value is that people say it has value. Think of it this way. When you buy a specific stock, that stock is backed by that specific company. Other currencies themselves are backed by government agencies like the US dollar. So you can be confident spending and saving your US dollars because you know the US government isn't going anywhere anytime soon. Since cryptocurrencies are held completely online and are not backed by anything real and tangible in this physical world, the world could just decide tomorrow that Bitcoin, Ether, Dogecoin, any one of these cryptos is worthless. If you had the choice of saving around $10,000 to buy your next car or saving 10,000 Bitcoins to buy your next car, which would you choose? If the car is valued at around $10,000, then you can buy that car with those $10,000. But if you have enough Bitcoins worth $10,000 today, tomorrow the value of those Bitcoins could be only $5,000. Actually, spending Bitcoins is not really reliable, at least at the moment. But some companies are trying to change that. You probably saw earlier this year that Tesla was actually going to allow all of its customers to buy its vehicles with Bitcoins. Other major companies followed suit, which actually led to Bitcoin hitting its record high of around 65,000 earlier this year. But two main things came to stop cryptocurrency again. In May of this year, the Colonial Pipeline, which brings gasoline to most of the southeastern US, was hacked, and the ransomware hackers demanded around $4 million in Bitcoin. As you can probably guess, this was not a good look for Bitcoin, and it resembled the early days where the Silk Road and other dark web users exclusively used Bitcoin as a form of payment. In addition, nearly $600 million worth of cryptocurrency was stolen from decentralized finance platform Poly Network. These two events brought up some major security concerns over cryptocurrency. Was it safe to use, and was your investment safe overall? Then you had major companies like Tesla going back on their word, saying they would no longer allow customers to purchase goods and services with Bitcoin or other cryptocurrencies. This time they cited the negative environmental effects that mining coins actually has on the world. Actually, mining a Bitcoin, for instance, takes up a significant amount of processing power and energy. Bitcoin and other cryptocurrency miners then have to use even more energy just to maintain and develop the blockchain. Right now, Bitcoin mining uses more energy than countries like the Netherlands and Argentina, which means Bitcoin mining is contributing heavily to carbon emissions around the globe. Its negative environmental effects, growing security concerns, and lowering confidence ended up taking Bitcoin from its record high of around $65,000 all the way down to $32,000 per coin, back up to $48,000, all in the span of a few months. So you could say the market is a little volatile. What's next for Bitcoin and the rest of the cryptocurrency market? Well, honestly, nobody knows the true direction of whether Bitcoin or other cryptocurrencies will rise or eventually fall. But in order for cryptocurrencies to be a sustainable investment or currency in the future, a few things need to happen. In order for a cryptocurrency to have sustainable long-term growth, it's going to need to be adopted globally. That means we're going to need to see more governments and more companies actually adopt the currency and accept it as a form of payment. This will help to make crypto a little bit more legitimate, which will bring confidence up and allow people to actually know that their money is backed by something. Once cryptocurrency is accepted, then companies and other institutions can begin ensuring cryptocurrency is a legitimate investment. It also may mean that crypto's technology may improve and become much more efficient. But this type of adoption will also most likely be followed by a lot of regulations. As you probably already know, the government has an agency for literally everything. For instance, the SEC, or the Security Exchange Commission, is in charge of the stock market. We'd likely see a body formed to cover cryptocurrencies as well, which means that cryptocurrency would probably fundamentally change, and everything that makes crypto would probably change as well. This may be a necessary evil, though, for investors to have cemented faith in cryptocurrencies. One thing is for sure, though, an investment in crypto is definitely a risky one, at least right now. When you invest your money, you are never guaranteed to make a profit, But when you invest in a cryptocurrency, you could see your entire investment vanish within a day or so. You could also see it triple or maybe even quadruple in a day or so as well. So before you buy your first coin and put any money in crypto, make sure you have a plan and assess your goals. Think, why are you buying this coin? Do you want to hold on to it for a long term or a short term? And do you believe in its future and know enough about it to actually invest in the coin successfully? You'll need to know all of this before you invest. In addition, ask yourself what your risk tolerance is. Are you okay with losing a ton of money or gaining a ton of money overnight? Or would you rather grow your money slowly and not have to watch your investment every single moment of every single day? Knowing this ahead of time is super important because investing the wrong way can be emotionally draining. This is because your investment may be based on fear, anger, or even just happiness to make a few bucks. So try to stay away from emotional investing and build a plan of action instead around facts and numbers that you can actually work with. And just a quick reminder, I am just a random guy on YouTube, so before you invest any money in any investment, always do your own due diligence first. But Money Minds, that is it for today's business and financial breakdown, but now I want to hear from you. Do you think that the Bitcoin and cryptocurrency markets will continue to rise and become a sustainable investment for the future? Or do you think they will crash and be worth next to nothing in the near future? If you enjoyed this video, don't forget to hit that like and subscribe button below. We've got a ton of more content coming out on this channel related to business and financial news, so stick around and we'll see you in the next one.